Loss aversion might be keeping you poor, and you might not even know it. So today, let's talk about it. What is loss aversion? Loss aversion in behavioral economics, according to Investopedia, refers to a phenomenon where a real or potential loss is perceived by individuals as psychologically or emotionally more severe than the equivalent gain. For instance, the pain of losing $100 is often far greater than the joy gained in finding the same amount. Investopedia goes on to say the psychological effects of experiencing a loss or even facing the possibility of a loss might even induce risk-taking behavior that could make realized losses even more likely or more severe. Does that sound familiar? If it does, let's talk about it. If it doesn't, then you are doing very well for yourself and you don't have to be here. So hit the like button and you can be on your way. Thanks for coming. But for the rest of you who are facing this psychological effect and maybe fall into it, as most of us are prone to given that we're humans, this is a cognitive bias that we all have. And it can really wreak havoc on our investments, especially if we're inexperienced and haven't been in the market long enough to realize that the stock market goes up and down. The lines don't just go up like the gurus on TikTok and other YouTube channels would like you to believe or will lead you to believe. Because by doing so, they can then sell you on their courses that teach you how to make the lines go up to the moon forever, right? But that's not how it works in reality. The reality is that the stock market goes up and it comes back down. And then it goes up, sometimes goes up for a long time, like between 2009 to 2020, and then goes back down. And then it goes up again. And we've seen this over and over the last 100 years. And the stock market has trended upwards over the long term, which is why on this channel, bullacademy.org, we practice the bull mentality. Because investing is best done over the long term. And if you don't know what a bull mentality is, the bull mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hold for the long term because that's how we build wealth in this country. That's how we give ourselves the best chance of success on the stock market. And I don't say that for no reason. There's a good reason for that, and that's because we've seen over and over again that when you try to time the market, you get burnt. When you think that you can pick a stock today and then tomorrow sell it higher for whatever reason, you're likely going to miss. It's a coin flip. And you're trying to predict the future. You can't do that. No one can, as far as I know or scientists know so far. But if you think you can, you're going to have a very high chance of seeing your losses increase and then trying to avoid more losses. And so you sell out and you then realize those losses. And sometimes the losses are greater than if you were to just hold on and wait and see what happens over the long term. Based on, of course, research. By doing research into the companies that you're interested in holding for the long term, invested in because you believe in them. And you understand what they do and what their plans are. In other cases of bad choices on the stock market is that you try to pick the latest trends and try to swing trade them because you think that all SPACs go up or all meme stocks go up and they never come back down because everyone on Reddit told you hold the line. And so you hold a line based on some projection that some guy on Reddit made telling you that, oh, it's going to go up in 2 months and you have to sell or you're going to lose the money. So loss aversion is most negatively impactful when you're...
Hey there, I just want to ask a quick favor before we continue. First, thanks for taking your time to watch this video. We hope you're enjoying it because it was a labor of love to make. You can help us continue to make more videos like this by simply liking the video below, subscribing to the channel, and commenting any thoughts you have. Even if you just want to say hi, it truly helps the channel grow and is important to the YouTube algorithm. So before we continue with the video, please don't forget to like and subscribe if you're enjoying it. Thanks in advance, and let's get back to it.
Loss aversion is most negatively impactful when you're planning and looking at the short term, trying to make some quick wins and gamble, right? Hoping that you can swing trade a stock or options. And you get caught because you had no plan for the long term. Because you just thought, oh, it's going up. But then at some point it starts going down and you start to get afraid because you think, oh, if I don't exit now, it's going to go even further down, right? And you might be right to do that because there's a good chance that you might lose lots of money if you're trying to swing trade something you don't understand. But that's why you have to plan for the long term. If you plan for the long term, you have the option to make choices along the way to look at the short term because you have a plan for the long term. And you can ride it out. As the stock market goes up, you can keep buying in. As it goes down, then you keep buying in because your plan is to hold for the long term. So you got to take advantage of those downturns. You don't get afraid when it goes down. You don't get afraid when your stock gets cut by 25% because of panic on the market. And when you see everyone else running away from sales on the market when the market is red, you are ready to buy in because you know you've done your research. You understand these companies, you believe in them, the ones you're invested in. And so you have this plan in mind to hold for the long term, and that way you get to take advantage, buy more shares, acquire more equity along the way, and build more wealth over time for cheaper. Because everyone else is throwing their stocks away, saying, here, you can have it. And you're saying, okay, I'll take it. I'll take it for 25% less. I'll take it for 20% less. Because you're not afraid. You're not afraid of losing money in the short term because you weren't planning to make quick gains in the short term. So if you or anyone else in the stock market were to ask me, hey Lincoln, how do I avoid or manage my loss aversion cognitive bias? I would say, hey, do what I just said. Plan for the long term. Don't follow the gurus telling you to buy the latest meme stock or some crypto just because it goes up. Focus on the long term so that you can take advantage of these downturns like we saw in the last 2-3 weeks in January of 2022. It was ugly out there. And if you didn't have a plan for the long term, you likely got very afraid and sold. And then you realized greater losses than you would have if you had just held on for a little bit longer and saw that the stock market was going to go back up as it did. So in January, I saw my portfolio get cut by 60%, something like that. Just completely cut. So I had to sell a little bit because I'm taking some serious risk and I had a plan to do so to make these sales. But the main point here is that I didn't sell things that I didn't have to. I kept the things that I wanted. And I have a plan to buy more if this dip continues, to buy more of my highest conviction plays, my highest conviction investments. But if you're planning for the long term and you're not taking crazy risks like myself, then you don't have to worry about selling in the short term and trying to plan for that. As long as you can stay in the market, you probably are better off just keeping your stocks invested. As long as you know what you're doing, you invest in the companies that you believe in, you've done your research, you're better off just turning off your Robinhood app and taking a walk. Don't really check it for a week or a month, whatever. Or if you can, continue to buy. Dollar cost average down. Take advantage of those sales. Don't fall for loss aversion. Don't just sell because everyone else is selling. Doesn't make any sense, right? If someone comes to you tomorrow and tells you, hey, I think your house is worth 50% less, are you going to sell it to them? Right? That's the classic question about bear markets. Don't let other people tell you what your investments are worth. Look at the numbers, do the research, and have a plan. And the best thing you can do is spend longer time in the market. On average, bear markets, corrections, they take 2 to 4 years to recover. So if we really get hit hard, you need to be planning for 5 years to be holding at least that long so that you're not trying to get out of the market because you need to liquidate assets because you invested money that you couldn't afford to lose in the short term. So if you invest for a time horizon that's 5, 10, 20 years out, you'll most likely be fine. Of course, this is not financial advice. As always, you know that because I'm not a financial advisor. But this is just how I think about it. How most investors who have succeeded over the long term think about it. That's exactly what they do. Warren Buffett, right? That's his thing. Investing over the long term. There's a reason for that. Because you can't time the market. But over the long term, we've seen the stock market just go up and to the right. Right? Of course, there's been huge dips and a lot of volatility along the way. But if you zoom out and look at the graphs since 1907, World War II, all of the depressions and the recessions, we've come back because humans are optimistic about the future. And the country is doing, or has been doing, all right? We don't know what's going on right now, but if you believe in the United States and the future of the country, then there's not too much to be worried about. And if you believe in the future of humanity and that we can overcome all obstacles placed in front of us and that we get ourselves into, as long as you invest for the long term and you hold, you'll be fine. You'll likely be fine. That's exactly why I don't come out here to you and tell you to buy the latest meme stock or cryptos or whatnot, because I have no idea what's going to happen with those things. The valuations are not tethered to fundamentals in any way. So I don't feel confident putting my money in them for the long term or for the short term or any term, because I have no idea what is going to happen tomorrow. All of the hype could just leave, escape that latest momentum play, and then your stock falls by 50%, 100%. Well, I guess it wouldn't go to zero, but it would probably go down 90%. That's not impossible if it's all sitting on a house of cards hype and hold the line and diamond hands because shorts. If you manage your loss aversion, cognitive bias better than you currently are, or if you already are doing that, then good. So apparently it's going to be a pretty tough first few months of the year from January to March, as the Fed plans to increase interest rate from near zero to about 0.05% and then to 1% or close to 1% by the end of the year. People are freaking out and getting and panicking because I don't know why we've seen higher interest rates. Of course, there's inflation that's higher than expected. We also just came from a pandemic, or we're still in a pandemic that's shut down the economies of the world, and we have supply chain issues. But people are freaking out about inflation because they're all concerned about the short term. We've seen so much higher inflation and so much higher interest rates, and along the way we've gotten Google, Amazon, Facebook, Twitter, a bunch of growth companies. Everyone's saying growth companies are dead, but growth companies have been doing just fine. We just saw Apple hit $3 trillion and somehow they're still growing. So if growth companies are dead, then I don't know. So if people are telling you that growth companies are dead, they have their own agendas or their own jobs to fulfill in this ecosystem, like talking heads on CNBC. As long as your companies still plan to make money and are executing their plans and you continue to believe in them, there is no reason to be panicking if you have a long-term perspective, long-term time horizon for your investments. I hope you enjoyed this video. If you did, do me a big favor, like it below, subscribe to the channel, hit the notification bell, comment your thoughts. I would love to hear from you. It's always good to discuss the market with all of you. Let me know how you're faring out there, if everything's all right. I was asked by someone on Twitter if I'm doing all right, and yeah, I'm doing all right. I'm here. Things get tough. I planned for it. If you're taking high risk like myself, you gotta be ready for the worst case scenarios. So that's what I do. And if you're not, then just look away or just keep buying in. So yeah, let me know what you're doing. Let me know what your thoughts are. And as always, these videos are brought to you by our patrons at patreon.boacademy.org. They support the channel financially and help me brainstorm new video ideas to show all of you. And in our Discord channel, we discuss the stock market in real time every day by sharing news, rumors, and new investment ideas so we can all do our own research and come back together and collaborate. So if you're interested in any of that, I would love to see you over at patreon.boacademy.org. I'm Lincoln with boacademy.org. Thank you again and have a great day.